Hello traders and welcome to another video analysis. Today is Friday 26th of the February 2021. Let's take a look at the Forex calendar to see what is going on the markets on the last day of week. As you can see, some data had been released already, and those are data from Japan. We got the national CPI, Tokyo CPI, we have the retail sales and industrial production, and from all of this data, only industrial production has beat the expectations because it was at the level of 4.2% versus the 3.9% forecast. All of the other data had been worse than expected, including the retail sales. So not a really good bunch of data from Japan. The Reserve Bank of New Zealand Governor Adrian Orr had spoken as well, half past midnight. So what is going on during the London session? There isn't any interesting and high importance events during the London session. There is some import price index from Germany scheduled for release at 8 o'clock. There are retail sales data scheduled for release at 8:30 from Switzerland. There is a French GDP scheduled for release 8:45. As you can see, for the fourth quarter, they don't expect much. They hope to be to get the numbers equal to the recent reading. The consumer spending in France is expected to drop vertically down from 23% to minus 3.5. Some other data from Switzerland, 9 o'clock, COF, economic barometer, and the gross domestic product are being released. The economic barometer is expected to be on the same level, 96.5, and the gross domestic product supposed to be for the fourth quarter supposed to be at the level of 0%. From 7.2%. So this is nothing unusual among the other data. We got another speeches in the morning from Eurozone, Isabel Schnabel, from the UK, Andy Haldane, and David Ramsey. And that's basically everything for the London session. During the New York session, we got some data mainly from the US. We got the PC core, personal spending, and goods trade balance scheduled for release at 2:30, and we got the Chicago purchasing and managers index scheduled for release Q4. And the other ones are Michigan consumer sentiment index 4 o'clock, inflation expectations 4 o'clock, and 7 o'clock Barker Hughes US recount. This is for all of you crude oil traders. So let's take a look at the US dollar to Japanese yen after the data had been published. As you can see, we got this ABC correction. Right now, this correction is going to be some kind of some sort of irregular correction, right? So that's still the ABC correction. That's still simple correction, but we stick to the plan despite the fact that the 106.23, which is the high for the wave 1, has been violated. We still expect this wave C to the downside before any new high will be made. If, however, this is only the wave A is on the wave 2, then it means that of course we are starting wave 3 to the upside, but we will see how this one will goes. Maybe we really should expect the breakout below 105.75, and then of course towards 105.12 and 104.93 in order to complete the wave C. We got some data from the Switzerland, so the Swiss franc. I think it should be good to take a look at this. As you remember, yesterday we have wave A to the upside completed at the level of 9,094 pips. Now we're expecting some kind of a wave B to the downside, and then of course we expect wave C to be completed between those two levels, 9,172 and 9,203 pips. So this is the target target zone for the wave C. If wave C will hit this target, then our zigzag will be complete. And as you know, the zigzag actually is a corrective pattern, so that would mean the whole up move will be considered only as a corrective cycle inside of a down trend, right? So please keep in mind this. We should take a look at the crude oil. The crude oil, as you can see, is keep going up. The recent test of the level of 60 made a dip towards 58, but since then it bounced very significantly. Now the last high was made at 63.80, and remember our target is still 65.19 and 66.55. So we are consequently going towards this level. Right now the market conditions are extremely overbought. As you can see, the RSI is still above the level of 70, which is okay if the market is trending, but we got some first indication of a possible bearish divergence, negative divergence to building, and the level of 65.19, 66.54 is a good level to stop this this uptrend. So that's the crude oil and sweet oil. Let's just take a look at two more markets, which will be the US stock markets. As you can see on this chart, we are still trending inside of the channel, but right now we are definitely jumped back in the channel again after this candle at the top of 3,958 points had been made. So this is clearly some sort of the bearish engulfing, but it's not on the end of the rally, but it's some sort, it's similar to the bearish engulfing pattern, and the bearish engulfing pattern is a trend termination pattern basically. So what should we expect? We should expect the market to go lower towards the level of 3,715 or 3,674. Why? Because the intraday technical support 3,894 had been violated, and 3,896 had been violated as well. So please let me just remove this to the top of the wave of the red candle, right? And then what we will do is we will just there you go, mark the top of the market at 3,000. This is 3,958 as a top right now, so that will be technical resistance right now. What should we wait for? For the test of the lower boundary of the market, and then possible of course breakout towards these lower levels. The momentum is already, as you can see, coming off the overbought levels towards the oversold levels. Right now it's below the level of 50, and there is pretty much some long way towards the level of 30, so we should end somewhere around these two technical support levels, and that will be of course out of those levels are of course out of the market channel, so the sell-off might even accelerate. And the last one is Dow Jones Industrial Average, of course, and the same situation, but this time we have a bearish engulfing pattern. Bearish engulfing pattern on a daily time frame chart is a clear indication that there is something going on, and I think we should as well move the intraday technical resistance to the top of the red candle. The top was made at the level of 32,037. So let me just adjust this, 32,037. There you go. So that's our technical intraday technical resistance. Bearish engulfing. Right now we should keep an eye on 31,235 because that's the technical support, important one. And of course we should take a look closely at the level of 30,334 because that's the next eventual target for the bears if 31,255 is violated, right? So please keep an eye on these levels, and I will just point out that this low, the low of the 23rd of the February, 31,160, right? So this is the low. Please keep an eye on this level as well. So it looks like the momentum is had touched the level of 70, extremely overbought conditions, and now it's sharply pointing down, and the market confirms the momentum. It keeps going down, so we should look for the level of 50, and then of course maybe we'll get as low as here, and that down move was here. This down move was 4.62%, right? So 4.62%. If we get as low as here, maybe we'll be in the level of 40 points on the RSI, and then there's still room to go to the 30, right? So if we go to the 30, that means very likely we have another deeper correction coming on the market of Dow Jones Industrial. So this is how it looks like right now. Please keep an eye on the levels in order to see how these levels are being played out by the market participants. So that's it. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys on Monday morning with a new fresh analysis. Take care and bye bye.